Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been a lot of volatility, a lot of interesting information came out. CPI, PPI, labor market information. So let's dive right into what's shaping the markets this week because I'm really seeing a complex picture in the US stock and futures landscape. One where positive economic signs are clashing head on with some serious geopolitical and trade relative anxieties. This makes super challenging to pin down a clear direction right now. On one hand, we've got some encouraging US economic data, particularly better than expected productivity figures that suggest the economy has some underlying strength, which is definitely something that could support market growth. And of course, the prospect of the Federal Reserve and other central banks potentially cutting rates even more. We are seeing right now 96% of probability in December for a 25 basis points cut. So certainly the market is pressuring on that, but also that's not clear yet. We have some negative pressures in terms of US and China tensions. It poses a real threat to global trade and, by extension, to our economy, adding a layer of uncertainty, the trading tensions, and the ongoing conflicts in the Middle East. Now, for the big part, inflation. Inflation is certainly taking a big talking point. While we are seeing mixed signals in the latest data, with, for example, the US core PPI year over year at 3.4 when the forecast was 3.2. The US PPI year over year at 3%, forecast 2.6, both indicate inflationary pressures. On the CPI side, we have also CPI year over year rising to 2.7 from a previous 2.6%, suggesting further increases, along with the US import prices month over month also showing upward pressure at 0.1% when a negative was expected. So we have this combination of CPI increasing, we have also CPI increasing 2.7, 3.3, 0.3, then we have the PPI also increasing, and then we have the import prices here when we were expecting this 0.2 in the negative. So a lot of initial push on the CPI, but I don't think this is related with the actual data. It's more related with the willingness on betting for the Christmas rally. But in terms of fundamental, we are seeing a really, really complex and concerning part. In all this, it is important to mention that Jerome Powell has been silent. It's clear that the Fed is keeping a close watch on inflation and economic data, with the likelihood of interest rate cuts appearing to grow, almost certain at 96% as we saw here. But looking at some specifics on the CPI, on the PPI, and also US banks deposit, for example, are decreasing, which might boost liquidity, but at the same time, our proposed US restrictions on AI chip exports are going to be hitting big tech companies hard. The US is also considering empowering companies like Google and Microsoft to be gatekeepers for AI chip access. So all this is making US short-term interest rates futures pair some losses and traders increase their bets on Fed rate cuts. But this is not a simple situation. We are seeing a lot of back and forth with data painting a really bad and conflicting picture and more conflictions. While we have a strong business optimism index, we are seeing a slowdown in retail sales based on the Red Book year over year. So all this is mixed, and all this makes really, really hard to predict the market's direction. So In the tech sector, there are concerns regarding the proposed AI chips restrictions, as mentioned, and also Apple and Google are being warned that they might have to remove TikTok from their app stores. Also, the US tariffs on Chinese polysilicon wafers and tungsten are set to start in January. So perhaps people is betting on a Christmas rally, but at the same time, in the horizon, the uncertainty and the concerns are big enough to really not have a big push that we are going to see that on the price action. So the US market is definitely at a pivotal point right now, and I'm going to be tracking all these developments closely. The sentiment is mixed. The positive economic data is offset by concerns about peak inflation, trade tensions, geopolitical risks. I mean, it's super difficult to really have with this combination of conflicting growth and geopolitical instability, and then we have some bad data on the CPI, bad business optimism. This is really hard. So let's see if this is the situation on the fundamental side. There's not clear direction, not clear sentiment, objective sentiment. So we are going to see in the charts how the market behaves, because at the end of the day, the price action is what we have to follow based on the fundamental, but price action is king. So we were seeing a slow decrease at the start of the week until Wednesday, when we had the big push squeeze that took the liquidity, buy side liquidity on this point on the CPI. So this was the CPI. Then we got the PPI, and then we got Friday. So you can see we have a strong confliction signal with core CPI and PPI being sticking, and we couldn't reach 22,000. We tapped 21,900, but then we have this big candle on Friday that was really a pullback on Friday. This is the 15-minute chart. So this pullback was really hard. We were opening with a gap and we held this gap. That's the only bullish sign, but this quite negative, having the basically, let me just show you the quadrants on this. We couldn't reach on this pullback the 50%. So this is bearish on the short term, but we have a big push on the CPI day. So what is happening? Well, I think a lot of shorts are being squeezed, but bulls are a little bit concerned. They are not pushing a lot. And on the daily, we can see that we were pulling back, CPI squeezed, then we pull back, and then we ended the Friday with a little bit of concerning popping tail on the all-time highs rejection. It's not clear neither the price action on the side of the daily and the 1 hour. We have certainly a huge bullish fair value gap here that is holding on. So that's 1 hour. All this is high time frame, which is good always to have the support of higher time frames. Look at this beautiful pullback. So in terms of the Nasdaq, we are seeing better sentiment than on the ES. Look at the ES. The ES is certainly bearish. It's doing lower highs, lower lows, while the Nasdaq is being pushed basically by Tesla. Tesla is in beast mode right now. It's pushing everything. It's not even Nvidia. Nvidia, it's below the point of control. It's below the point of control. So we have to really pay attention to this. Semiconductors are a little bit better than Nvidia overall, but the banks, XLF, banks are not liking this. And overall, look at the breadth. Red is certainly saying we are going to move a little bit down. We are not liking this. Look at these consecutive candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive daily candles in the red. And this is showing also momentum to the downside, trend to the downside, and a little bit of pullback on the long term. So certainly we are seeing pressures. This is not action. We check the Russell is pulling back a lot. We try to push, but then a consecutive of concerns pull back the small cap bullishness. Nasdaq, tech, and consumer discretionary is what is pushing this market up. Why? Because basically we are in a Christmas rally mode. That's the only thing that we have to really be smart here and think about how is this happening and why. Because the price action is it's certainly better on the tech sector, but we have banks, we have techs, semiconductors not really pushing. I mean, really careful. Yields are pushing higher also. Look at the 2-year yield, the 10-year yield. So certainly there are inflation concerns right now. So in conclusion, the US stocks, futures, it's a really complex environment right now. Some economic data points to positive growth, potential rate cuts, but significant risk remains. Trade tensions, geopolitical instability, persistent inflation are the three main drivers of this choppy market. If you are trading the Nasdaq, you are a little bit better positioned to say that certainly more bullish sentiment, but there are signs of rejections, a lot of volatility. ES is certainly putting a very different perspective. So this divergence is really important to note because one of these is manipulated. And if I would have to bet, I would say that this is the manipulation move. And on the 1 hour that we are right now, we are going to really watch this pullback. Certainly this 50% retracement with rejection. So this is bearish signatures. On the 30-minute, we have also bearish signature here, not willing to push the 50% on the wick. And the narrative on the 15, it's also same. Have certainly this bearish signature right here on Friday. So be really careful. We close the initial gap and we are going to see really things how develop. If we push this pivot, that would be better because we might be squeezing higher next week. But I'm really concerned about this very signature and start drifting lower, grinding lower, and then at some point the puke on the bulls when this pivot is taken. So be really careful next week. We are more and more week and week after week, we are coming to the end of the year. And while there's a little bit of Christmas rally on the tech, we have to really open our eyes and be smart with all these conflicting signatures. And certainly there's a big divergence on the ES and the Nasdaq, and we have to be careful. That's all from my side. As always, thank you for your time. If you found these weekly recaps useful, please give them a like, subscribe to the channel. I upload these kind of videos every Saturday for a weekly recap in which I cover everything on the week, but also Monday through Friday. Sometimes I have personal issues like this week, but most of the days I do daily videos for market forecasts, market updates, market recaps. I appreciate your time. I hope you had a good trading week. It was super difficult to trade. So be smart and now disconnect a little bit on the weekend and rest. Do your own analysis and let's continue next week. Remember, trading is Mostly discipline, patience, and risk management. If you want to success, you have to master them. Have a nice weekend and see you on Monday.